Today, we're diving into the absolutely baffling case of X3 Holdings, ticker XTKG. And really, this isn't just a stock story. It feels more like a financial thriller, packed with contradictions that have Wall Street completely and totally divided.
So get this. This is the core mystery right here. How on earth can a stock that completely craters, dropping 43% in a single day, also get a strong buy rating from analysts? It's like one side is looking at a car crash and the other sees a rocket ship on the launch pad. On the surface, it makes absolutely no sense.
And that really brings us to the central question we have to ask. We're talking about a company that is just bleeding money, with sales that are shrinking, and yet you have experts out there screaming at the top of their lungs to buy it. So let's dig in and look at the evidence for both sides of this pretty incredible story.
Okay, first, let's look at the case for the bears. We're talking about the overwhelming evidence that this company is in some really serious trouble. And when I say serious, I mean it.
Just try to wrap your head around the sheer scale of the problem here. A negative profit margin of over 850%. To put that in perspective, for every single dollar of revenue they manage to bring in, they are losing a staggering amount of money. It's like lighting a pile of cash on fire.
And we're not talking about theoretical losses on paper. Over just the last year, the company has burned through over $82 million in cold, hard cash. That is a massive hole to try and dig your way out of.
Unsurprisingly, all of this has been absolutely devastating for shareholders. We're talking about an 81% drop in a single year. That's a complete and total wipeout for anyone who happened to invest just 12 months ago.
And, the bad news just keeps piling up. Revenue has basically fallen off a cliff, down almost 2/3 in just 3 years. They have less than a year of cash left to even keep the lights on. And to raise money, they've been issuing so many new shares that it has just crushed the value for existing owners. The bottom line here, the financial picture looks incredibly bleak.
In fact, things got so bad that they had to perform what's basically financial surgery just to stay listed on the Nasdaq exchange. They did a 1-for-20 reverse stock split, which is where they bundle 20 of your old shares into one new, more expensive one. Let's be honest, it's a move that's often seen as a last-ditch effort to avoid getting kicked off the exchange entirely.
But just when it looks like the story's over, that the company's headed for zero, there's a massive plot twist. X3 Holdings announced this incredibly bold, high-tech reinvention plan, a strategy so ambitious it completely changes the narrative from one of just trying to survive to one of potentially explosive growth.
They're calling it the multi-engine strategy, and it's a wild one. First, they're going all in on crypto, with a plan to acquire 30,000 new Bitcoin miners. Second, they're jumping straight into the AI and metaverse hype with a new platform for air cargo logistics. And third, as if that weren't enough, they're buying a company called Xpic Games to get into the massive digital gaming market. I mean, each of these would be a huge undertaking on its own. Doing them all at once? That's a bet the company kind of transformation.
But there is a giant roadblock here, a huge one. X3's core business and most of its customers are in China. And that's a problem because, well, for one, China has a complete and total ban on cryptocurrency businesses, so that's a challenge. And two, trying to operate any kind of tech business there means navigating this incredibly complex web of data security and privacy laws. This whole situation makes their crypto and AI ambitions extremely challenging, to say the least.
So you end up with this massive collision. You have a company in what looks like financial ruin, attempting this incredibly high-risk, high-reward pivot, all inside a really tough regulatory environment. And this, as you can imagine, has created a massive battle of predictions on Wall Street.
And here you can see that divide in action. It's fascinating, really. Depending on which technical charts you look at, you get a completely different answer. The short-term trend followers, they see a disaster and are screaming strong sell. But then you have other analysts, and they're looking at different metrics, like moving averages, which kind of smooth out the price data. And they see signs that maybe, just maybe, the stock is bottoming out. So they're calling it a strong buy.
So what does all this mean for an investor? Well, one thing's for sure, high volatility. The stock's beta of 1.08 tells us that it's already prone to bigger price swings than the overall market. This is absolutely not a stock for the faint of heart. We are talking about a pure roller coaster here.
And just look at this unbelievable gap. If you want to understand the stakes, the stock is currently trading for pennies, just 16 cents. And yet some of these forecasts are predicting it could hit an average of over $12 by 2030, and maybe even soar past $30 by 2040. The potential return is just astronomical. So you have to wonder, is this an epic miscalculation, or is it the opportunity of a lifetime?
Okay, so with all this conflicting information, all this chaos, how could someone even begin to approach a stock like this? Well, the sources we looked at actually lay out 3 completely distinct strategies, all based on different timelines and how much risk you're willing to take. And remember, this is just to explain the thinking, we're not giving out advice here.
So let's break this down. First, you've got the short-term player. This person might try to trade a quick bounce off the recent lows, a pure high-risk gamble. Then there's the mid-term investor. This person's going to take a wait-and-see approach. They'll sit on the sidelines, watch for actual proof that the company's turnaround is working before they even think about buying in. And finally, you have the long-term player. They're treating this like a venture capital bet, putting in a small amount of money they're fully prepared to lose, all on the tiny chance that this wild vision actually comes true, with their eye on those massive price targets years and years down the line.
Which brings us right back to the ultimate question at the heart of this financial thriller. Is X3's incredibly bold strategy a brilliant escape from oblivion, a genuine path to a high-tech future? Or is it all just a final, elaborate act before the curtain falls for good? That is the billion-dollar paradox of X3 Holdings.